had a client say the other day, where's this recession that you've been talking about? It's not evident in the stock market. Well, I got news for you. If you look at the most economically sensitive areas of the S&P 500, they're telling you the same story I'm telling you. The AI trade has nothing to do with the business cycle. That is long-term secular growth. And utilities and staples, really? You're going to say to me, this is a bullish stock market when they're at record highs and leading the way, the two areas that you want to own in a recession. Despite the fact that the stock market is still flat for the year and has done nothing since the November election. It's just been, I said at the beginning, a meat grinder and a roller coaster ride. That's all we've gotten. All we've gotten in the past 6 months in the S&P 500 that everybody, and I guess based on your question, and I would include you, Anthony, believes that the stock market is doing just fine. It's done nothing for 6 months. If you're bullish on the stock market, you don't want it to be flat. You don't want to be taking equity risk and capital risk and then have a flat market. That's not why you buy equities. You buy equities because you think they're going to be going up, but they have not been going up for 6 months now. To me, that's the more important story. The fact that we bounced off an oversold low in April, to me, is just background noise. The bigger picture is that the market is flatlining and that the most cyclically sensitive parts of the market are actually in decline. To me, that's the real story beneath the story.